Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, welcome to the technical analysis of the Forex market from the ForexPeaceArmy.com, and today we will return to discussion of the euro currency. Well, I just leave the euro currency discussion for the single day just to turn to the Australian dollar, and here we got a strong plunge during yesterday's European Central Bank press conference. But some kind of such scenario we have discussed in our weekly researches. If you remember our fundamental discussion during a couple of weeks ago, well, we said that first of all, market stands at monthly overbought area, and market will struggle to move higher and be ready for the possible strong retracements on the daily charts to the downside. Be careful. Also, we said that if you are a positional trader, you trade on the weekly and monthly time frames, this is not the time to establish any long positions, because market is overbought from the technical point of view, and we should ready for some solid retracement to the downside, because monthly level of overbought is rather an area than just at a particular level. But if you consider the highs was precisely at the area of monthly overbought. Monthly overbought for May stands around 149.30 area. It's right here. Market hit it and plunged to the downside. Also, this was the daily overbought area. From the fundamental point of view, we all know that this plunge to the downside has happened due to the decision of the European Central Bank that they hasn't raised their interest rate, because all this move and all this growth on the euro currency was supported just the expectation of the investors that by two factors. First of all, both of these factors we have specified in our weekly research on the fundamental part a couple of weeks ago. So the first factor was that Germany should show significant macro data, the economy, this growth, the retail sales and employment and others. And the second, the rising of the European Central Bank rate. So that hasn't happened. So as the data on the Germany was mixed, it's not very positive. So this led to some plunge on the euro currency. So what we're gonna do today, and what we could do in general. First of all, I just want to remind you that today the non-farm payrolls release, and I suppose that it's better to focus on some short-term trades. In general, just below the market, you can see that area 144.30, 144.70. I think that market should not break it currently, because this is daily oversold and daily confluence support. I think that if market will continue move to the downside, it should stop today somewhere in this area. So the room for the further down move currently is a bit limited by this level. But I do not know what the number will be on due the non-farm payrolls. So it's just an expression from the technical point of view. If non-farm payrolls will be extremely positive, then possibly we could expect even the breakout of this area, who knows. But from the technical point of view, this is rather strong area of support. Okay, daily trend turns bearish. You can see that very nice signal, good angle of piercing of two lines. So I think that this is not the time to enter on the long side, and at least for those of you who trade on the daily time frame and on the high time frame. If you're in a positive positional trader, you should wait for the deeper retracement, and I think that could come during the couple of nearest weeks. Now let's shift to the intraday chart. This is hourly chart. What we see here, first of all, this is our skewed and distort broadened top pattern. Why I said skewed and distorted? Because in general, when the market shows the broadened top, it should show 5 points, touch points of this bodies of this parallel broadening top. But here we see much more touches. I think that's about 8 or never 9. Only after that we will have seen this breakout to the downside. Well, in general, market has accomplished the target of this pattern, because if you take a look at the wide width of this broadening top, market has moved to the downside exactly the same distance. So this is the classical approach for the trading of this broadening top. Now, what do we see currently? First of all, market moved below the monthly pivot point. It's right here, 145.75. Also, this area, the weekly pivot support 1. Just below the market, around 144.30 area, stands our significant area of support. Here we see that possibly our chart could show the double ripple buy pattern. Will it work or not? I do not know, but because the double ripple patterns works better on the daily and high time frames. On the intraday charts, they very often shows the double ripple failure, for example. But if it will work, you can try it, because your stop will be very tight on the hourly chart. I just want to remind you that your stop should be just below the 618 support from this low to this high, and you can enter on the long side of the market when the market will close above this green line. This is a 3x3 moving average, and it will show the closing above it. This is with bar confirmation of the double ripple, and possibly you can enter on the long side of the market. Well, if you're bearish and do not want to take the signal, that's fine. In this case, you should wait for some pullback to the upside, because previous upside momentum to the market is significant. Okay, so market could show the deep retracement to the upside, and my preferable area to watch for is this area 147, because this is 618 resistance from this thrusting move to the downside. Weekly pivot point 147.20, and as you can see, this is the trend line of the broadening top. Okay, so this will be the significant resistance, and possibly if market will intend to continue move to the downside, it should show some deep retracement to the upside. That's my current view on the situation on the euro currency. So I think that we should not marry any position to the release of non-farm payrolls today. I think that we should try to trade short-term trades on the intraday charts. Now I would like to show you the weekly time frame, just to make some preview for the weekly research during the current holidays, because it will, I suppose that will be very interesting. Now let's take a look. This is, by the way, my software. This is the CQG system for the technical analysis. So what do you see? This is weekly chart of euro currency. First of all, look at this. This is pattern that very similar to the Jordan Apple railroad track, but this is not the railroad track, because we see the price action to the left side of this pattern, not far away from it. If it will be above the previous highs, then this we can say that this is the railroad track and the wash and rinse of previous highs. But still, if market will close at these lows when it stands currently around 145.54, then this will be some kind of price rejection pattern or something. And the target of this pattern, usually the length of these bars. As you can see, this will be very close to these previous tops, 141, 140 area. So that's retracement will be absolutely logical. And as you can, if you remember, we discussed this possibility on the previous weekly research on the farm. Okay, now let's add MACD predictor, Jordan Apple. Here is this indicator. It shows us the trend. We see the trend clearly bullish because price action is above the red line. And take a look, the trend will remain bullish even if market show retracement till this area. Okay, so that's retracement will not erase the bullish trend, long-term bullish trend. And I think that this could turn to the long-term weekly bread and butter buy. For example, if market will retrace lower and reach this area, for instance, we add even example retracement software. Okay, you can see that this is precisely the 3/8 support 141.40 area that stands right at the previous highs when the trend will remain bullish, and This is the target of this possible pattern if market will close right here or even below it. Okay, so that's a bit longer term view, and I think that in this case we could expect the move right to the 140, 140, 140 area. This will be absolute normal price action in the long term bull trend, and this is the area that positional traders should watch for to establish long positions. Currently I do not see any strong bearish reversals on the long time charts, so I think that the bullish context is still intact on the long term perspective. So that's my view on the long term chart, but in more details I will post it on the forum, the weekly research. Okay, so that being said, do not marry any position, trade short term. I think that if you're bullish, you can try to take this double repo buy on the hourly chart with the target around 147. If you're bearish, wait for the pullback. I think that this pullback could be deep, right to this 147, 147.20 area, and try to establish short positions for a larger A, B, C, for example, D pattern on the daily time frame. But try to take your profit before the non-farm payrolls will be released. Good luck to you, and take your risk reasonable.